So today today's discussion is based on request from our audience, and so we're looking to speak on what every Nigerian should know about Treasury bills. I will have no one better than Cyrus Ademola, the financial analyst.
Yeah.
Welcome, Cyrus.
Yeah, thank you for having me.
Yeah. So, as a secure and government-based investment, T-bills offer Nigerians a reliable avenue, to grow their savings, right? So we're looking to what T-bills are, how they function, and the benefits they provide. You get so let's go straight into it, Cyrus. Can you explain what Treasury bills are really and how they operate within Nigeria's financial system?
Yeah, thank you very much. And that's a very important question because T-bills, like you said, or Treasury bill, whatever you want to put it, it's a form of investment.
Okay.
But it's a peculiar investment because it's an investment that is offered by the federal government to the CBN, the central bank, and it's just an avenue for you to borrow the government some money.
Okay.
And so it's also a debt instrument from the government to raise certain funds, revenue for certain obligations that they have. So it's a domestic debt, so to speak. It's a debt security from the government. So, like I said, it's peculiar. It's a peculiar debt instrument because it offers a fixed, predictable return.
Predictable return.
Yeah, what I mean by that is like, for example, if you invest in real estate, you cannot say your return is fixed or even stock. Right?
You never know, really.
Yeah, exactly. So it's based on market fundamentals. It's based on volatility in the market. It's based on inflation.
Yeah.
It's based on, whatever happens. People, you can even lose money.
Yeah.
In T-bills, you cannot lose money. So it's a fixed, predictable return. Whatever the interest is, that's what you're getting back from the government. And it's backed by government fiat. So there's no issue. It's a very straightforward, safe investment.
Okay. We already have one point. Definitely T-bills are a very good source of in form of investment.
Yes, exactly.
Yeah. Okay. So I was going to ask if it was a safe investment, but I'm pretty sure you've already
it is a safe investment, and I think a lot of people need to know how it works because it's the safest kind of investment that you can have because it's backed by the government and its return
is fixed.
It's fixed.
Yeah.
And beyond that, it's also something that you can just like put your your income, your leftover income or whatever your savings in, rather than putting it in the bank. Because if we put your money in the bank, inflation will just erode it. Inflation is going high and high now.
Yeah.
I think it's about 33% now.
Okay.
So it's safe, like you said. It's a safe investment.
Okay. So how can an average Nigerian, purchase Treasury?
That is the big question. Like, how do I get involved? How do I participate? Yeah, so T-bill is usually offered by the CBN to the primary market. But for an average Nigerian, I would think it would be better for you to participate in the secondary market. Now, the difference is that in the primary market, if you're a deep pocket player, a deep pocket participant, the offering is usually, for individual, I think 500 million.
Okay.
And for institution,
500 million.
50 million. 50
okay,
million.
I was about to say.
So 50 million, but for
bigger investment.
Yes, institutions, right?
Yeah.
So what usually happens in the secondary market is that those who buy them in bulk, they bring it in the secondary market, and you can participate for even as low as 50,000 or even less, depending on the platform or the asset management firm that you're working with.
Okay.
So, So how do you participate? I think the first thing is that you need to know about the space.
Yeah.
Just like any investment, you need to get educated, you need to get informed and say, okay, fine, what is going on here? And then you also need to be aware of when it is announced. Because CBN announces auction to DMO, Debt Management Office. And then so when that is announced, then you bid for it.
Okay.
And then bidding for it is like, okay, this is the amount, this is the interest that I want to offer, right? The government. And the government put a cap on it and say, this is how far we can go.
Yeah.
And then once that is done, right, then the bid is closed. And then you get, the interesting about it is that you get it at discount. So this is how it works. Let's assume that you are investing 10,000 and then the return is 10%, just for conversation's sake.
Yeah.
The return is 10%. What you get, what you pay upfront would be the 90%.
Okay.
Right? Let's say,
because of the 10%.
Yeah, so the 10% is what you get upfront, like as your savings.
So you drop 9K.
So you get 9K as a discounted offer. Yeah. So, but when you are doing the maturity tenure, you get paid back by the government the 10,000, the face value of the offering. So that's what the interest is. That's what the interest is.
Okay.
So that's how it works.
Okay. And what factors influence this interest rate?
Interesting. So many things influence. Because like I said, it's a government. It's a government security.
Yes.
It's how government raise funds for themselves to the domestic, to the financial market. So factors, of course, will include inflation.
Yeah.
Right.
Definitely.
Yes, inflation. If the inflation climate is very high, right, and people, they know the incentive that people are looking for a place to put their money to hedge against inflation. And that's why we're talking about investment. Because if you just leave your money in the bank or in your pocket or whatnot,
it's not doing anything for you.
And then it's losing value.
Of course.
It's losing value. So the government believes that people want to invest in, securities. So when there's high inflation, there will be high demand for treasury bills and other securities like that. So the interest on treasury bill will be high.
Of course.
If there's high inflation. So it's always sink. It may not be as high as the inflation rate because, like I said, it's a moderate form of investment.
Yeah.
Because the maturity term is very small. The highest is about 1 year.
Okay.
So it's a moderate form of investment. So it can be like now the last offer was about 22% thereabout, even for the 364 days offering. Yeah. So I think the 90 was about 18%, and then the 18%, and then the 182 days was about 20%. So, but it's just a way to hedge against inflation. So inflation will determine the interest on it. Economic realities, changes in bank, interest rate also plays a factor. What is the interest rate that the central bank is offering? Right now, interest is about 27%, right? Okay. Yeah, so all of those things will come into play, and also the liquidity in the market, because remember, the liquidity in the economy, the government is also trying to mop up liquidity. Okay. It's also a debt instrument to mop up money from the system. Because usually when there is too much money in the system and not enough corresponding productivity, there is inflation. So
I see how that can convert.
Yes. So to reduce money supply, one of the securities that the government use, or one of the money market instruments that they use, would be treasury bills. So all of those things play a factor. Okay.
So the current offering at 27% is 22%. 22%. That's a good.
That's like one of
offer, right?
Yes, because usually because Nigeria right now has a very volatile system, very volatile climate. Yeah. Like the inflation is up the roof. Normally, inflation should not be more than 4-5%. Even in very difficult environment, 4-5-6%, right? Kenya inflation is about 4%. I think South Africa is about 2%. Even Tunisia is about less than. Yeah. So, but Nigerian inflation is 33%.
33.
So it's not a normal situation. It's not a normal situation, and also we have issue with FX. Yes. We have issue with FX.
Scarcity?
Not stability, I would say, not liquidity. Okay. That's the word. Like, there's not enough supply of FX to go around for the demand. Okay. Yeah, the CBN governor, Yemi Cardozo, has said a lot about that. Yeah. And it's a challenge. And simple because the main commodity we are using to get FX in this country, we're not producing enough of it. Yeah, we are trying, but we're not there.
Which is oil, right?
Yes, crude oil. So, offering at 20%, it's almost out of the normal, right? Yeah. It's just an aggressive way that the CBN, is using to incentivize, bringing in that liquidity, especially from foreign participants, like foreign investors. Yeah. So it's not just open to just local investors, but also foreign investors. So it's one of those instruments that they use to, and even almost all the securities that the government has issued lately, whether it's FG bond, whether it's Sukuk bond, whether it's any of their securities, it has been high. Yeah. Even the last Euro bond that we did was about 10%. And that is a foreign currency-dominated loan
environment, right?
Yes, so it's high. Because it's because
that is high though, really.
it's high. It's high. So and you're borrowing government this money, and they have to pay back.
Pay you back.
They have to pay back, and they may say, oh, it's a long-term thing. It's a 2 years to 20 years thereabout. The Eurobond, I think Eurobond is about 2 years to 10 years. But you still have to pay back. You still have to service the debt.
Yes.
You still have to service. You have to use your revenue to service the debt. So the government is more in a very delicate situation.
Yeah.
But that is the instrument. That is the toolbox that they have with them to mop up liquidity.
Yeah, this is still in line with the next question I have for you. I actually had to write this one down. So we're going into the market dynamics, right? Okay. So what does high demand for longer tenure Treasury bills, like the record
oversubscription?
2.2 for 1 year. T-bills. How does it indicate about investor confidence and market trends?
Yeah, it is both good and bad. Okay. When we hear things like, oh, the Treasury bills, the securities are oversubscribed. Yeah, and people often assume that, oh, that's a good thing. We're bringing in loan, we're bringing in equities. Yes, we're bringing in a loan, but we still have to pay back. Of course, the government
have to pay back, and earnings are not as much.
Yes, exactly.
Excuse me, sorry.
So it's both good and bad. It's good because it shows confidence. It shows that, especially for deep pocket players right now, it shows that they have confidence in the market. Okay. In the capital market, in the financial market. It shows that, it also shows that they are looking for a way to save their money. Yeah, they're looking for a way to save their money. They're looking for a way to put their money. And, of course, there's capital around the world, right? And it's always looking for a place. Capital is a very scary commodity. Yeah. So it goes to a place where it likes. What does it follow? Interest rates. It follows interest rates. Yes. So, so what it means is that Nigeria right now has a very hawkish interest rate.
Okay.
And so a lot of people are thinking, let me bring it to Nigeria. Let me put my money here. It's safe. It's government backed. It's it's different from other kind of money market instruments. So I think I would like to ask that question again so I can answer more specifically.
So let me read it out the way.
Okay.
So what does the high demand for longer tenure Treasury bills, like the record 2.5 trillion subscription for 1 year?
Okay.
For 1 year Treasury bills, right? So what is the indicator, you understand, about investor confidence?
Okay.
And market trends?
Okay, I think I've answered that, but let me just say, just for the listeners again, it's good because it shows that people are confident in Nigerian market. Okay. Yes, it shows that there is a lot of participants in the market, and it's also good on the other side because government doesn't have to rely on other instruments that may have inflationary implications. Let me explain.
Okay.
For example, ways and means. If the government is not raising enough money to the domestic safe system, like Treasury bills, like FGM bond and whatnot, and they don't have enough firepower to go to the international market, the international creditors, and borrow loan, right? Like World Bank, IMF, and others. What they usually turn to is print money. And that is worst.
And that will definitely trigger inflation.
Exactly,
right?
And that is actually worst.
Yeah.
So it is a good thing that people are confident in the Nigerian market. It's a good thing that the market is where it ought to be. And investors are thinking, okay, let me put my money here. It's edge against inflation. So it's a win-win situation for both the government and the players.
Okay, so definitely. So if you are investing big in the 500 million category, you are guaranteed to be the safest, right?
Yeah. No, everybody is safe.
Okay.
Everybody is safe because they feel, like I said, it's a fixed return.
Yes. Okay. So it doesn't really matter.
It doesn't really matter. You get what you put in. So you get exactly what you put in.
Okay. Okay.
So I'm saying it's impossible to lose.
No, it is impossible to lose in all government securities. As long as you are borrowing government money, government will pay you back. So
it's like a trap for them.
Yes. Government will have to pay you back because it's back. It's like your money, like your currency. It's backed by fiat. So it's backed by the government treasurer, and government is the most creditworthy institution in the world.
Yes. So government remains the government.
They will always pay you back.
Okay, so then all what you said is quite interesting. Like, so how do treasury bills compare to other investment vehicles, like let's say maybe like fixed deposits, or bonds, in terms of risk and return, really?
Okay. I think if you are talking about that kind of money market investment, treasury bill is still the safest choice for anybody. It's still the safest choice, whether you are a low income earner, you are a mid income earner, you are a high income earner, whatever position you are, is the safest investment strategy, the safest investment opportunity for it. Now, it also has to do with your own, like, what do I want? Your own investment goals, your own investment objective.
Okay.
For example, if you are a high income earner, or you're even maybe, you've worked for a long time, you have this huge savings in your deposits, you have this huge liquidity, and you don't want to use it for a long time, you may not want to look at treasury bills.
Yeah, because you have to wait for a long period.
No,
right?
Because you want the maturity to be longer.
Okay.
Yes,
okay.
You look for other securities, right? You want the maturity. You may look for FGN bond or other securities in the market where you can buy even stock. You can buy stock and then wait.
Yes.
And that's the thing. Some people, they buy stock and they want they want yields in 3 months. If you are that kind of investor, what you should be looking at is treasury bills.
Yeah.
Not stock.
Fixed,
not fixed deposit, not bonds. Those are not the things you should be looking at, because those require long-term. Those also they are aggressive markets.
Yeah.
So they are exposed to all kind of fluctuations. They are aggressive.
They drop and rise.
Yes, it drop and rise. Of course, the market is liquid. It's not like crypto. No offense to crypto investors, but the market is liquid. But treasury bill is just, I want to put my money here for 3 months. I want to put my money here for 6 months. I want to put my money here for a year, and I'm sure that is short-term bills. Yeah, short-term debt instrument. Exactly. So it depends on your own goals. It depends on what you have. It depends on what your objective are. It depends on the kind of investment you have. So it's not cast in stone that I should choose this or I choose that. But in terms of pros and cons, the pros, I would like the con would be that your return does not rise.
Okay.
It's fixed.
It's fixed. You know what you're getting.
You know what you're getting from there. What you put in, you get.
So it's a matter of you just deciding how much you put. How much
you get from there. So your return, and that may be a con, because if you are looking for, and if you are doing it as a long-term strategy, especially in a situation like Nigeria is a very exceptional situation.
It is. Nigeria, it doesn't go by the books.
No. What I mean by that, for the past, if you look at it, since 2021, Nigerian inflation has maintained an upward trend. Even some eases that we have, maybe 1 or 2 in different months, does not really mean anything in terms of reality. So you ask yourself, where can I put my money? So imagine for the past 2021 is how many years now?
That's 3 years.
Almost 4 years, right?
4 years.
You are betting against inflation. So the market is volatile. So if you are in that kind of aggressive environment, and you are doing you are doing treasury bills over and over again, it will catch up with you. It will definitely catch up with you, and then so you may not get enough, because let's assume that you're getting the highest that has been offered now is 22%. Let's assume that you're getting 22% in the next 1 year. Put that in line. Okay, I don't want to be negative, but if inflation continues like this, or even if you maintain this particular trend, in the next 1 year you're getting 22% of your return, ask yourself,
value of the money will be different.
is it, what have you really gained
You've
like
not
that?
Really, because
So,
the value of the money.
that's why I said that might be the con. The fact that it is fixed. Yeah. But if you are betting against FGN bond that has huge interest rate on it, and then you're going to get the money in the next 10, 15 years, right? It may be a way to hedge against inflation. And then when you get the money back, your interest has already covered all of those potential losses.
Okay. But that's riskier.
Yes,
if you want more money, you must be ready for more risk.
That is investment 101. If you want more money, you must be ready for more risk. So, that is investment 101.
So, Kayode, have you been convinced to go and purchase Treasury bills? To invest in Treasury bills?
I wouldn't say I'm confused. I'm just wondering, what is the reasonable minimum that anybody can put in Treasury bills?
50,000.
Yes, but right now we have a changing technology and different platforms, different asset managers are offering different amount.
Yeah.
I know of some, I don't want to mention name, but I know some fintech that offer even as low as 10,000.
Okay.
Yeah, you can put 10,000 and then, you're part of it, you're a participant, and then you get your fees and come back.
Whatever you get, don't be bothered. Because 10,000 at 22%.
No, not 22%. 10,000 cannot be 10 because that is maybe 90 days.
Yeah, so where you get the 10,000 is when the big players are bought, then they come down to the secondary market.
Yes. And again, you have to know that the interest rate goes up as based on the longevity.
Yeah.
So if you have 90 days longevity, I just put 10,000. Maybe it's like 18%. It shouldn't be that much. It should not be more than 6% or 7%. But like I said,
so 18% is like 1,800.
Yes, the way you say it. but the interesting thing
but
is
because you invested 10.
Yes, but the interesting thing is that, think about it, you put your money in the bank, 10,000 naira. First of all, they charge you 15 naira levy. Levy for that, your 10,000.
Of course.
Yeah,
account maintenance and a lot of other things.
And they use your money to invest. So why not use your own money to invest?
Even if it's 1 naira.
Yes. They are, that's what they are doing. They are using your own money to invest.
The banks do not like you this morning. You need to bring this up.
Oh my.
It's also a service that they provide. Also, I don't want to go ahead.
Don't worry, we understand you. Trust me.
It's also a service.
Oh my goodness, we're out of time. I still have so many more questions, but I mean, we'll have it to definitely bring you back into studio, Cyrus. Thank you very, very much for coming here today. And you can always catch up with Everyday Money Matters on our YouTube page and on Spotify as well. Follow Nairametrics on all social media platforms, and we look forward to seeing you guys next week.